Going on, everybody? CEO Dez here. If you're new, thanks for tuning in to the channel. I give various entrepreneurial tips, tax advice, different things like that. So today we'll be talking about taxes, tax year 2020, and specifically we're going to get into credits versus deductions. I feel like a lot of people might not know the difference. They both help you in your taxes, but one is better than the other. Let's dive in. Okay, so first we're gonna go over deductions. There's two main types of deductions. First, you're gonna have your standard deduction. The standard deduction is what everyone gets. It's set by the IRS every year, and this is what everyone gets unless you're able to itemize. We'll get to that in a second. So standard deduction, if you're single or married filing separately, it's going to be $12,400 this year in 2020. If you're a head of household, if you file head of household, it's going to be $18,650. And then if you're married filing jointly, that's going to be $24,800. So, like I said, those you're gonna get those automatically unless you're able to itemize your deductions. So that brings us to number 2, itemized. Itemized deductions. These are expenses allowed by the IRS that will decrease your taxable income. Obviously, the lower your taxable income, the lower tax you're gonna have. Typically, when you take the standard deduction, you're not gonna be able to itemize. Example of an itemized deduction would be charitable contribution. You gave money to charity, you can write that off in itemized deductions. Next, we're gonna talk about tax credits. Credits basically encourage spending. It's simple. They encourage spending, and then they give you a credit towards those various expenses. The most common tax credit taken each year is a child tax credit. So basically, any taxpayer with a child under the age of 17, you're going to get a credit that helps to reduce the cost of raising a child, basically. A child is an expense, right? I don't have any kids. Knock on wood, but I know I was an expense to my parents. So everyone with a child under the age of 17, that's a child tax credit. So you're gonna get $2,000 in 2020. You're gonna get tax year 2020. You're gonna get up to $2,000 per kid. That's a child tax. Another very common tax credit is the lifetime learning credit. So say you're in college, you're in grad school, the IRS is going to give you a portion of what you pay for tuition back during tax time. So that's why a lot of schools are required to send you that 1098-T statement. That's your tuition statement, and it lets you know what you paid for tuition and what you may be entitled to as far as tax adjustments. Okay, so first I'm gonna take you through the tax deduction example. So let's say you made $10,000 in the year. That's your annual income. Then let's say you had a $1,000 deduction. I don't know what it is, but nonetheless, it's $1,000. So a deduction obviously is going to decrease, takes your adjustable income to $9,000. Then let's say you have a 10% tax rate. So you're gonna do obviously 10%. 10% of 9,000. Sorry, I got ahead of myself. 10% of $9,900. That's what you would owe in this example. So now we'll take a look at the tax credit example. Tax credits, gotta love it. So you got the same $10,000 annual income. You're gonna start there. There's no deduction, so we're just gonna start at the $10,000. So same 10% tax rate. Gonna multiply 10%. This is your tax rate. What's 10% of 10,000? 1,000. That's your taxes owed with the credit example. So now we got to add in the credit. Our credit was 1,000, just like the deduction we used of 1,000. We're gonna use the same $1,000, but now it's a credit. So the credit comes in at the end. You see, now we have $1,000 in taxes owed. With the $1,000 credit, bingo, $0 owed. That credit wipes out the $1,000 tax that you owe. So, long story short, we like credits over deductions. So, to wrap it up, what's the big difference? Tax credits, tax deductions. Hopefully, that's how you feel at the end of this video. Tax deductions basically chip away at the income that you'll be taxed on. So obviously the lower the income, the less taxes you're gonna owe. So yes, that does help you. But tax credits directly reduce the taxes you owe, just like in that example that we just went through. That wraps up the video for today. Tax credits versus tax deductions with CEO Dez. If you like the video, please like. And if you want to hear future videos about taxes, entrepreneurship advice, getting a business started, various topics like that, go ahead, hit that subscribe button, and let's make some money.